Welcome back. Today we're looking at a piece on energy fuels, UUU, arguing that its recent 15% drop is actually a gift for investors.
A gift, yeah, based on some pretty huge growth projections for 2026.
Right. So let's jump in and see how we can make this thesis truly bulletproof.
Okay.
First thing, to really land this argument, the piece has to do a much better job of neutralizing the panic around that executive stock sale.
Absolutely. It's the elephant in the room.
Yeah, the whole gift idea, it just gets kind of derailed by that fear right at the start.
Right. The weakness is that it mentions the CEO selling, over $2 million worth of shares.
Right, which triggered the drop.
And then it just moves on. It doesn't give the reader any reason not to be worried.
So the suggestion is to add some very specific context. You have to show that these sales are not a red flag for the company's fundamentals.
And you can do that with data, right? For example, what percentage of the CEO's total holdings was that sale? Was it tiny?
Or even better, was it part of a pre-scheduled plan, a 10-5-1 plan?
Exactly. If you add that detail, you instantly reframe it. It's not a fundamental problem, it's just market sentiment.
Okay, let's move on. That massive forecast for 2026, that 500% revenue jump,
Yeah,
the piece needs to build a much stronger bridge to get us there.
it really does. I mean, the weakness is that it's asking the reader to take this huge leap of faith.
A huge leap from a $16 million net loss now to positive earnings and...
And over $120 million in revenue in just a couple of years? You can't just cite analyst targets for that. You have to show the how.
Exactly. So our suggestion is to use the company's own balance sheet to prove it's possible.
Make it tangible.
Right. Create a clear line of sight from today's assets to tomorrow's growth.
So, for example, they have almost $100 million in cash and $45 million in inventory?
Mm-hmm.
Don't just list those numbers. Show how that cash is going to be used to ramp up production. Talk about specific facility restarts, new contracts.
Anything that grounds that huge forecast in reality.
Yeah.
And finally, let's talk about the theme. The title asks a great question. Is the drop a gift?
It's a great hook.
But the analysis needs to lean into that framing a lot more consistently.
Yeah, I agree. The weakness right now is that it introduces this really compelling gift idea.
Right, this opportunity born from panic.
And then it just kind of reverts to a standard financial data dump. It loses a story.
It does. So the suggestion is to restructure the entire piece around that gift metaphor. Think of the technicals, the pullback, the low RSI as the gift wrap.
I like that. The gift wrap.
And the fundamentals, like its status on the critical minerals list, the strong balance sheet, that's the actual gift inside.
So you build the tension. For example, you could open with the fear. Start with the drop.
Mm-hmm.
Then you pivot. You contrast that fear with an undeniable strength, like the company having almost no debt. You show why it's resilient.
And then you reveal the prize.
Exactly. You finish with the reward, that $20 plus valuation that's justified by the 2026 earnings. You're paying off the promise of the title.
All right, so to quickly recap. First, disarm the fear around the insider selling with hard data, like percentages or trading plan details.
Second, connect the dots. Show exactly how today's cash and inventory will fuel that massive 2026 revenue jump.
And finally, really own that gift narrative. Structure the entire piece around it, from the initial fear to the final reward.
Make those changes, and this goes from a good analysis to a really compelling, unshakable investment case.
We'd love to see the revised version.